Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm here with another video. And this time, this video corresponds to the market primarily, and this market mayhem that is going on at the moment. So, we'll discuss about that. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should that with their own due diligence and research, and I'm not in favor or against any company that I talk about. I am not a member of the NSE and BSE, and that I am not a portfolio advisor. Whatever discussions with respect to markets or investments I do have is purely on the basis of my experience into the market, and whatever decisions with respect to investments you take, kindly do consult your financial advisor before doing that. Before I talk about the market, say a small request, kindly support me on Patreon. Once you do that, it will help me grow the channel, help you also ask me questions, seek out answers in greater detail. Once you get the membership, you'll have access to my portfolio, my watch list, a number of podcasts on domestic and global economies and whatever the markets are doing, discussion on different companies, and plus a long-term pick from my end because the markets are iffy. So I'll bring that on a weekly basis, and whatever queries you'll be having, I'll be answering that. So in order to discuss about the markets, let me take you to the TradingView website. So this is the carnage that is currently taking place in the market. And if you look at the India VIX, we are around 21 at the moment, and we dipped a bit intraday, but now we are going up again. I believe that it is time for people to, if you have the funds, to buy into the market, and for people who are invested into top quality companies to not get panicked, because over the next week or so, the way VIX is cropping up and going to 21, it may go to 30, 35. Markets may go down another 5%, but this will not sustain forever. If you look at it, if markets keep on falling 8, 10% every day, then over the next 12, 15 days, we could be at zero. So that doesn't happen. Yes, there is carnage, there is blood on the street, and people are in extreme pain. I'm down again. I was down earlier and down again around 10, 12% on the new portfolio that I made about a few days back. And that portfolio doesn't have, you can say, exposure to the US markets. It's still, we are down. So across the board, there is selling in Shanghai, selling in Hang Seng, selling in Dow, US markets, and it has to culminate into coming into, say, the Indian markets as well. So, but if you look at it, the VIX has gone up sharply, but VIX went to 21.9 in the morning. The mid cap index, small cap index, all made some lows. 47,000 on the mid cap index, small cap index went to 41,000 uh, at the lower band. And now these indices are trying to recover. So what I feel is that this is the precursor of the bottoming out process for the markets. If you have positions in stocks, just stay put. This is similar to what is happening, what happened during the pandemic, because the VIX shot up in the US to around 65. The VIX was at around 42, 43 on Friday, and probably will shoot up even more today. So uh, this is a golden opportunity for people who want to invest, who have cash, and this is also a golden opportunity for those who are in the market, because these are the times we wait for, because after this we are going to see a massive rally. Now why I am saying this is that if you look at it, we made a bottom today, or we made a low today. I won't say a bottom, but a low today, closer to 21,750. And if you look at it from 1 year forward earnings basis in India, we are trading at 17.6 times, which is not at all expensive. In fact, it is very reasonable considering the last 5 years earnings profile and the PE that we used to trade at. Normally, if I open up the screener website, you'll understand that normally we have traded at higher valuations than this. So if I open up Nifty 50 here, then I'll just give you an idea. If you look at the PE ratio for the Nifty 50 over the last 5 years, the average has been 22, 22 and a half, and we are currently at 17 and a half on a forward PE basis, and I'm taking a reasonable 10% growth, 10-11% growth. So if I take a 10-11% growth from here, uh, even if from 1120, which is the current EPS, if I take a 10% growth, that's what I'm looking at. So I'm looking at 1232 rupees of earnings, and at 21,750, which was the low, we are trading at around 17.6 times, whereas 5-year average has been around 22 times. And these are, yes, consolidated numbers which the market started to take in 5 years back, 6 years back. On a 10-year basis, the average has been around 23. On a max basis, the average has been around 21, 22. So 21 to 22 is normally the markets have traded at, and on a 1 year forward basis, we are trading at 17.6 times. Even on current earnings, if I look at the lows of today, then we are looking at a scenario where the market is trading at 19 and a half times. So there is a potential of a 10-15% upside on the Nifty immediately when this everything goes back to normalcy. If I look at the small cap index that people are worried about, that the BSC small cap index was expensive, it was trading at 28 times after the rally, but at 41,000. So if I look at it at 45,900, we are trading at 28.5 times. Okay, so 1610 rupees is the EPS. That is what I have taken out. The low was 41,000. At 1610 rupees, we are trading at 25, 25 and a half times. So that is the low on the PE that we made. So on a PE basis, you are at 25 and a half times below these levels of 26 and a half that we made on 3rd of March. So we are trading at 25 and a half times, and let's see what has been the average over the last 5 years. It's 33. So again, we are below that. Yes, we are not at those 22, 23 kind of PE in March that we were at, but we are back to 25, 25 and a half times on current earnings, and the earnings are set to grow on major small cap stocks as well. So yes, we could go this way, that way over the next 3 months, but overall I believe that the market is set to do much better than what it looks like. And you can pick your stocks and probably look at it in that manner as to which stocks to look at, which stocks to buy. You can pick that up. But overall, I believe markets around 21,000, 21,500 is extremely attractive from a 3 to 4 years perspective. My perspective in the market is around 3 to 4 years. So you look at consumption stocks, you look at especially you look at themes where there is elite consumption comes into play, watches, cars, etc., or other kinds of jewelry for that matter, because of the weddings and everything. You look at capital markets play. You look at consumer discretionary kind of stocks like electronic manufacturing, etc. They are set to do well. They are expensive, but if you have a 3-4 year horizon, we are going to do extremely well. Remember 2022 to 23 period when we fell, and then the next 2 years were pretty good. Remember the pandemic time in 2020, when the VIX shot up then, and from there on in we made a lot of money. So overall I believe that the markets are set to do well if you look at a 3 year time frame. So I'll give you another idea. If I open up uh, Google in here, and if I say CBOE VIX, this is the VIX of the US that we are talking about. We were at 45.3. Now I open up a 5 year chart. This is the maximum. If I open up a max chart, this is during the pandemic. So during the pandemic in March, we went as high as around 65. We are at 45. Probably another 20% surge is possible uh, today, because 5-6% fall on the indices in US is very much possible. So we could be in a situation of going to 54, 55 on the VIX, and that is unprecedented. And that is why I believe that when extreme fear is there, even if you don't have the money, I understand majority of people who are in the markets all the time. They might not be having the money. Just stay put with your stocks and you'll gain over the next 1 year. And those who have funds, start putting in. If you can put in 30-40% of your total, whatever you want to put in at this point of time, and gradually put in even more over the next month or so. I think by June, July, these things should go. I mean, should be much better. Things across the globe should be much better. Even if US put in more tariffs, things should be much better going forward. So this was a video on the markets. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.